Okay, hi everyone, it's me again. I created the presentation I'm going to give you for startup finance. There might be some people like maybe Benoit. Benoit has a finance background in Sandwalk, but this is really done for somebody who knows absolutely nothing about finance. Given that, there might be some things which are a bit complicated for people who know about finance. Look, I really feel it's so important to know what I'm going to talk about. And at the bare minimum, what I'm going to discuss is something that should be in your thought process when you're looking at the world and you're looking at startups. And sorry. So if you're in a startup, you need to think along these lines. You just need to be aware of these things because it would really affect the way investors would see you. Like really, I mean, I'm not just talking from, theoretically. I talk to investors on a regular basis, and the fact that I understand these things is really making me stand out from just they realize, okay, this guy understands economics or business or finance. So I really encourage you, and this will give you more leeway when you're talking to these investors to be like bouncing ideas off of them, or just having a casual conversation. They throw a sentence, and then you can give them a sentence, and you can build a connection. Oh, where it's like a little club. It becomes like a little club that I understand and you understand. So I really recommend that if anything is too complicated here, we can talk about it, see where it's complicated for you. If you understand nothing, then I have to reevaluate how I'm going to give this because it's the first time I give this kind of thing. I've given stuff about finance before, but this setup is the first time I give it in this structure. So I'm just going to start by sharing my screen and starting with the presentation. Okay. Can everyone see my slides?
Yes.
Yes,
Yes.
everyone? Yes, okay. So it's going to be split into 5 topics today. First one is venture capital thinking and generally the things that go on in VC, which you should know about. And then very briefly, we're going to go into CFO basics. Then we're going to talk a bit about telling your financial story. And of course, we're not going to be able to talk about your financial story today because it's a group session, but each one of you is going to have a slightly different story, even though you're using the same kind of framework to make sense of your numbers and what your numbers mean about your business. Then also financial modeling, it's such a huge topic. We're going to cover a bit of it, like the bare minimum. I don't want you to become CFOs or financial modelers. If that's not your thing, it's not your thing. But you should at least be able to, if the CFO is talking to you, you should be on the same wavelength, really. And then we can end it with a bit about pricing. So it's a varied set of topics, but overall, I think you should be familiar with these things moving forward. So you hear a lot, finance is boring or finance is hard. So I need somebody from the audience, like who thinks, just you can unmute yourself and say me, who thinks finance is boring and who thinks finance is hard? Just like blurt it out. I want to see if there are any of these
no. I think finance is boring and hard.
Okay, so Noura, مين كمان؟
كمان
مين؟
أميرة.
نور, Hikmat, who else?
I don't think it's boring. I think it's just hard. It's something that I don't have experience with, so that makes it
Right.
hard.
انا وجهة نظري finance could be easier بس taxes وكل هالقصص خلص make it way more complicated than it needs to be.
Right. Yeah, I mean,
Yeah.
I hope I've distilled it in a way where it's just we can make sense of it. And if not, I'll have to break this down into like 2 parts, part 1, part 2, with part 1 being the intro to part 2. So let's continue. So then you get this thing, you get like a compounded effect. Finance is boring and finance is hard. And who wants to study or understand a field that's both boring and hard? But I really don't think it's boring. I really don't. There are parts of it which you might find boring and parts of it which you might find hard. But I find it overall as very mentally stimulating. I really do. And I hope that you can at least start to get the ball rolling with your knowledge of finance and how you should think about finance. Because once again, we are in the investment business. And if you're coming out of iPark and you don't know the difference between pre-money valuation and post-money valuation, or you don't know what a journal entry is, or what the income statement is, or what's the difference between gross margin and operating margin, these are things you need to know. So I'm recording this. I know if I share it, many people probably will not look back at it again. But you can have it on the side for those who are really become enthusiastic about it. It's really a good building block because I cover different topics. And then if you want to go deeper, I can help you go deeper. So we can continue. So there's something called the CFA. I'm sure some of you know what this is. It's the Chartered Financial Analyst certification. So some investment companies, they need you to have a CFA level 3 to be able to become a portfolio manager. It's broken into 3 parts. Now, this 3,384 pages is only CFA level 1. Okay, only CFA level 1. So look at these topics. You have economics, portfolio management, corporate buy and sell side, financial statements, equities, fixed income, derivatives. It's mind blowing. So I want you to start to see that there's a field of study that's called finance that's extremely wide, and maybe you find yourself interested in one part of it. I don't think anybody's an expert on everything in finance. Different people will start to gravitate towards different parts of it. So maybe this is an intro to see where you could step in and begin. So this, I mean, maybe some of you right now are pulling your hair and you're saying something like, finance is so complicated, I can never learn to be good at such things. And on second thought, I don't want to. Never was I a math wizard or never was I a brain. Fine, you can think that way, but it's not conducive. If you're a CEO, it's not conducive to confidence from the rest of the team. You know what? Maybe the rest of the team is equally as ignorant in finance. I'm talking like when you're talking to investors, you can't afford not to know this stuff. Okay. So to break it down a bit, we're gonna start with venture capital thinking. And the venture capital thing, it's basically broken down into 2 parts. Okay. It's you have your limited partner and your general partner. Okay. The general partner is the person that has the money from the limited partner and who actively invests in startups. So the general partner would go to a limited partner and tell them, maybe it's a limited partner, could be an insurance company, it could be a university endowment fund manager, it could be high net worth individual. The limited partner comes in and says, hey, I want to allocate my funds. And there's different ways to allocate. So the general partner would say, okay, hey, we invest in fintech startups in MENA. This is how well we've done. We believe we can do better. Give us your money and we will allocate. So these are the 2 things you always, when you're thinking about venture capital space, you think about limited partner. You can think about limited partner as a very rich person or a big institution that doesn't want to actively manage the funds. They want to give it to the general partner. And the general partner then evaluates how to allocate the money into investments. And I found a good analogy once that a general partner is like a good weatherman. They can have a good forecast. They feel it, like, okay, they can see the economic landscape, they can see the trends, they've been through it. So usually these general partners would be ex-CEO, ex-startup CEOs, and the really good ones would have sold their company for a big valuation, and then they started to be investors. So this is a track you'll see in common, especially in Silicon Valley, that they become entrepreneurs, And after they become entrepreneurs and they do well at that, they become investors into entrepreneurship. And please, if anybody has a question, just interrupt me, okay? And then we're going to go a bit into talking about how, I'm not sure if everybody's familiar with the treasury bonds. They're just the way that governments or other institutions, they can raise money in the debt markets. And the limited partner of the venture capital institution cares about that. And we'll get into that later. I have a special gift for somebody who can figure out why they care about it. And we're going to talk about also why interest rates, when something like the Federal Reserve in America, when they raise interest rates, it also affects the venture capital sphere. So if you're taking anything from this session, it's that you cannot afford to think about venture capital without thinking about the greater economy. They're extremely interrelated. So that's just something to keep in mind. Questions? I can't see the chat, so because I'm share screening, so please just ask. Okay?
All good so far.
Yeah. So I said limited partner with these institutions. The limited partner might make he wants 25% IRR. That's what they want as a return. We're going to get into what IRR is. But the general partner will say, I'm going to give you more than that. But then the VC tanks. Most of the VCs, they lose money in the long run. They're not, they end up going out of business. And the VCs who do well don't overpromise. But they would have historically their data, and when they show it to the limited partner in due diligence, the limited partner would then evaluate, okay, am I going to get this kind of return from this investor or not? So it's a very analytical process between both the limited partner and the general partner. And then let's say the VC fails to get above market returns. If they do badly on the fund, they'll never raise money from anybody ever again. It's a cutthroat business. So when I say something like above market returns, who in the audience doesn't know what that means? It's okay, don't be shy. You need to be honest here. Okay, honesty team raised hand. So once again, this is like a very basic financial concept. You have, okay. So the market, usually when people are talking about market returns, they're talking about something called the S&P 500. It's just an aggregate of the best 500 companies in the United States, and they aggregate how their stock prices are moving up and down. So what you can do is you can actually invest in this. You can actually say, okay, hey, there's this, it's like a statistical measure, and it follows how different companies are doing. And you can put money there. So if the market, if the aggregate of all the companies' stock price is going up 12% per year, and you put your money in, let's say you put in $100, by the end of the year, you would have, your money would have gone up with the market as value. Now, venture capital limited partners don't care about the market. They want returns above the market. They're not going to be like, okay, if why would they invest in a general partner if they could simply, in a very less risky way, put money in the stock market and just look at their investment grow? They're putting in money with the general partner because they believe they're going to get 100% return. They're going to get 2-3x on their money. Hopefully, sometimes 10x, 20x. This is really the thinking of the VC. It's not like we see the market return. You can let the simple people just say, I don't want to take too much risk, go into some very safe index. We call them stock market indices, indices like index. We're going to find a star general partner. Now, also, something else you want to always keep in mind, what you mentioned in the previous slide, IRR, okay? Is anybody, like, I hope everybody in the audience understands the concept of return on investment and how you calculate this. But the internal rate of return is something very different, some ways. And to understand this, you need to get into a concept called the time value of money, which we're not going to get into now. This is like finance 101. But what you have to understand is IRR and ROI are not the same thing. They're two different things and they mean different things. And it's easier to explain with a spreadsheet, but I'm not gonna like stop share and reshare. If you want to understand more IRR, I can show you in Excel what it does. It's a formula. Basically, the value of IRR would be higher the sooner you get the investment back. If it's a return on investment, if you had $100 and you invested it, and in 10 years it became $200, okay, your ROI would be 200 minus 100 over 100, the simple formula. But with internal rate of return, if you had 100 and in 1 year it became 200 versus in 3 years it became 200, the IRR would be higher the faster you get your money back. And it might sound a bit iffy, but the thing is, think about it logically. Forget about IRR. Let's say I invested money with you, whoever. If I had $1,000 and I told you, hey, take my money, which would you prefer? I'll give you back the money tomorrow, or I'll give you back the money in 10 days, or I'll give you the money back in 30 days. Of course, you want your money back as soon as possible. And IRR takes that into consideration. So you see, when you look at different funds, the different VC funds, and you see their historical record, you are very unlikely to see ROI. You would see IRR. Like it's a very widely used metric when you're talking about VC and how VCs look at success in their portfolios. And there's other things which you need to keep in mind about venture capital. You have the management fee, the hurdle rate, and the carried interest. Now, I know it's a bit too much to swallow, and like I want to hear from the audience. Is anybody like feeling this is way too complicated, or are we doing well?
We're trying our best, يا هاني. I'm trying our best.
Yes.
طيب غير
لا
honest.
لهلا ماشي الحال.
مين عم يحكي؟
حكمت.
لهلا ماشي الحال. طيب.
إيه.
Okay, good.
حس
So
بعد هالسلايد حيبطل ماشي الحال. We will see.
that's you.
حس بعد هالسلايد حيبطل ماشي الحال بس we'll see.
ليه هيك بتحس؟
لا، كل سلايد عم يزيدوا القصص اللي بدنا نحسب حسابهم زيادة وزيادة.
عن جد it's worrying يعني مش complicated قد ما worrying.
Why is it worrying though?
لأنه that's a lot of like new information يعني ما كنا نعرفهم أو شيء هيك.
Hey, that's good. I'm happy.
Because new terminology.
These are things you need to know. Like أنا بدي حدا يطلع من iPark وبيعرف هالأشياء. Even if you don't know them, at least be familiar إنه قاطعين علي يعني. ما إنه ما بعرف. No.
We can fake it.
You can fake it, but you
it.
need to know. I mean, you need to know at least a bit to fake it. You
Yeah,
can't fake it
بالضبط. We
completely.
just learn enough to fake it.
Yeah. I mean,
If
I
it
mean,
gets you the money, it gets you the money.
yeah. So like with venture capital, you have these three numbers you need to think about. How much is the management fee? So I'm the general partner, right? Let's say Noor Hassoon is the limited partner. Noor Hassoon has $500 million net worth. They want to invest $50 million into a VC fund, okay? So the $50 million is the amount of the fund. The management fee is what I get paid to manage the money. So what's 2% of 50 million is شو $200,000 بالسنة؟ ما بعرف. I probably got that wrong. So and 1% of 50 million
1 million.
yeah, exactly. 500,000. So I get $1 million. I get paid $1 million a year to manage this dude's money. It's a lot of cash. Okay. But that's one thing. I get paid a management fee to manage that person's money. Now, the fund, these VC funds, that what you have to know is like they are usually structured with a fixed term. So the VC would say, we're gonna invest over a 10-year period. We're gonna, for the first 4 years, we'll invest in the companies we want to invest in, and for the next 6 years, we follow on invest. Because usually startups need more than one investment over time. So the VC would get 2% per year on the gross amount of the fund. But at the end of the fund, there's something called hurdle rate and carried interest. Hurdle rate is what the limited partner needs as a return on investment. So if they had 50 million, they would need 8% of that to go to them first, and then the rest of the profits that are left would be distributed between the limited partner and myself. So I get, as a general partner, I get 20% of the profits of the fund. That's a lot of money. Like you cannot get these kinds of returns easily. But if you're a very good VC or private equity fund manager as well, private equity is just, it's like VC, but it's for more mature companies. So it's for like companies who've been around for 6, 7, 8 years, and they're worth a ton of money and they want to do a buyout. So think about VC as early stage private equity. You can think about it like that. And in both VC and private equity, you get 20% of the profits of the fund after the limited partner gets their 8%. Anyway.
في شيء ما فهمته. So ال VC بتدفعهم لهول من their own money ولا من the money they invested؟
ما فهمت سؤالك. الفي سي قصدك اي بارتنر؟
مثلا management fee 2%.
Yeah, so if there's $50 million size of a fund, we get paid from the fund itself.
Okay, so هيدا بعدها كل العملية it doesn't involve the startup side.
100% ايه ليك man, startup side ما بدها كتير. Startup side is like you find your niche you invest in 10 companies hoping one would make it and 9 fail. This is the generic VC way of thinking. We're not going to go into portfolio development today. Yeah. It's a different topic وبدها courses عن الموضوع.
Yeah, okay.
These are just how these things are built. And if you want a tidbit about how they actually, the VC partner, the general partner actually invests, the general model is like that. Because they give money and then they disperse over milestones. So let's say they invest in you, حطيتوا targets. When the target time بيجي, if you haven't reached the targets, you don't get follow-on fund. So this is generically how it works من ناحية the general partner and how the general partner would think about the investment strategy. Okay, so something yes.
I have a question. When you say, I'm not sure if I missed it, 20% out of the return from the startups, let's say conversion or الاشياء يعني ولا 20% from what? Would be
20% of the profits that the fund that they're like the investment.
Profits. Okay.
In the investment.
Usually it is a startup conversion أو شيء.
هون يعني بيكون إنه that we had a startup and we had an investment in a startup. We either sold our investment for a bigger amount of money to a company that wants to strategically acquire the startup, or we look at the money اللي بيجي when you go into a public market. So it could be one of those two things. يعني when your investment
حسب الانفستمنت
100% حسب انت وين علقان. بتفكر انه المصريات بيكونوا علقانين بالانفستمنت لما بتبيع your position, we call them positions. When you sell your position, then these are the profits that you realize at the end of the fund. واضح؟
Clear, yes, thanks.
Yeah. Okay, كمان هون just something هيك high level. كمان هيدي it's easy to not know it. You might think it doesn't matter, but it does matter. يعني if you're talking to an investor and they're saying, I'll invest in you $1 million for 9 million valuation pre-money. Does everybody understand what that means?
Yes, من بتذكر I think كان في video lesson that you gave us وقت
وقت ال idea validation program.
Yes, about this.
Anybody other than Noor who doesn't have an elephant's memory? Anybody doesn't know what this means? If an investor tells you we're gonna give you $1 million, 9 million pre-money, it's the same as saying we'll give you $1 million, 10 million post-money. But this is important to know. Like you need to know this. You need to be able to think this way. يعني إذا حدا أجى قال لك $9 million
Without an example, it's different to visualize this.
What do you
Although
mean?
we've read it and we remember the Excel sheet, without a small example, it's difficult to visualize the difference.
No, the difference is simple. The difference is simple. It's a simple concept. When they say I will invest 1 million pre-money, think about post-money valuation as pre-money valuation plus the invested amount. That's the formula. So post-money equal pre-money plus invested amount. بس هيك. Is
Hani,
that
I have
clear?
yes, it is clear. عندي يعني question mark على هالفورمولا بصراحة.
Okay.
My conception إنه when there's investment, let's say 1 million, whatever, the value, it's not only money. يعني the value تبع valuation we can say of the startup مثل كأن صار عندهم زباين, so value increase. So what يعني ما بعرف إذا يعني you got my point?
Investment is capital,
يعني
which means
الvaluation البلس هيدي pre money يعني I expect بالpost money أعلى من الانفستمنت money اللي نحط يعني.
ما هو
because it added value يعني. هذا
بس ما
الconcept.
هي the pre-money valuation it includes the investor's perception of the company. يعني بيكون درسها شوي، بيكون يا عنده company he's invested in the past، بيكون في شيء على السوق محطوط data. So بيجي على هالرقم مش completely as a blind guess، بيكون عنده data بالportfolio where he's comparing. So لما يقول لك 9 million pre-money بتكون it includes what you're talking about. الاشياء اللي انت you find them as intangibles.
اوكي.
It's just semantics. It's just like word play. يعني إذا واحد بس إجى قال لك 1 million investment for a 9 million pre-money, know that it's the same as a 10 million valuation post-money. They're identical. بالحكي يعني.
Yes, clear.
Okay. طيب هو أنا بعرف أنا I owe رضا النور a sushi dinner ما نسيت. بس هون we want to understand why do limited partners in the VC fund care about interest rates and the winner gets a sushi dinner? Anybody know this? Apart from Benoit.
إذا أنا ربحت
Interest.
اثنين.
شو نور؟
If I win, do I get a second sushi dinner?
Yes, you get a second sushi dinner.
Okay, let me Google it. Look.
No Googling. ولا Google.
Chat. Ask chat.
Okay, ما حدا بيعرف إنه لازم حدا يعرف.
Interest, you mean interest rate out of what? From the GP, general partner?
لا الانترست ريت تاعول الفيدرال ريزيرف
It
بامريكا.
should be higher than his bank's return.
Because of
it's
the-
also for the investment appetite of the market. So if there's a high interest rate in the market, people will put their money
to save on their
so
taxes.
the VC investment will go down.
Yes. So
high interest rates also determine إنه حيصير في a bust cycle after it, from what I know. And usually it's a bad sign.
لا this هو مزبوط بخصوص الانترست ريت والباست. The past couple of years كانوا خايفين macroeconomically انه حيصير في a hard landing as in انه حيدمر الايكونومي. But ما صار hard landing. علوا الانترست ريتس وهلا بكندا وبانجلند وطوا الانترست ريتس وهلا this month عم بيقولوا بامريكا حيوطوا الانترست ريتس وما صار في catastrophe. So هو ideally they play with the interest rates just enough to calm down price inflation يعني price increase. بس مش شرط انه يصير في like a bust. مش شرط ابدا. بس the thing is هلا هيدي كمان it will be hard to completely just يعني to explain this completely بس when the central bank in America raises interest rates like the commercial banks would لكن هيدا معقد شوي إذا بدكم بلا ما نفوت بالديتيلز of how it actually works mechanically just think and when interest rates go up in the central bank the rates on government bonds in America for example what you could get risk-free from a bond in the United States economy في شيء اسمه risk-free investment it's in the US economy okay it's good to know this كمان لأنه US bonds that are issued by the government they have risk-free as in they guarantee you that if you lend the money you get the money back with a premium they give you the premium so when that premium becomes when the interest rates in the macroeconomy go up the premium that these bonds would give you as an investor in the debt markets would also go up. So as a limited partner, I have $500 million. I'm getting a big return on a risk-free investment. Why would I go to venture capital? Why would I take such a risky route if I'm getting good money on these risk-free investments? This is just
مثل لبنان يعني وقت رفعوا الانترست ريتس ما حدا استثمر فرانك بالبلد لما هبطت الليرة صاروا العالم عم بيعملوا SMEs هون بلبنان.
بلبنان كل شيء بالقلب اجمالا.
طيب, you can continue. Well, this is just another thing. And when we talk about interest rates and company valuation, you don't need to know this formula. But the denominator side of things in the formula of the valuation, in the denominator, the interest rate goes in. So when the interest rates go up in the denominator, the value and the interest rates are inversely related. So the valuations are going down and the interest rates go up, there's less value in these venture capital markets to go around. So, okay, I think this is for, that's enough for VC thinking. Does anybody have any comments or any questions?
يعني هاني مثلا sorry.
No, please go ahead.
إنه what could they مثلا إذا بدنا نحط حالنا ب a real life situation and scenario, how would the conversation strike up where we need to use this terminology? إلا إذا actually closing a deal أو مع investor.
Yeah, but that's what we want. We want when the due diligence of the investors come in تطلعوا بتعرفوا عن شو عم تحكوا. يعني هيدي الفكرة. Because if you mean let's say okay شو عنا الفانل شو هو cocktail party by Endeavor. You meet an investor, hey, we're doing this, we're doing that. Investor, oh great, I really like the vibe. Let's get on a call. Okay, so show me your numbers. And what are you gonna say? Oh, I don't know finance. Maybe you hire a CFO and the CFO is gonna be the one doing all the talking. But if the CFO is doing all the talking and you're the silent CEO, it does not reflect well. And now you're telling me that every CEO is a finance head? No. Lots of CEOs know very little about what they need to know. And I want you to be like financial CEOs. يعني, I'll give you an example. Last year, my friend, he's a successful entrepreneur. They've raised Series B, over $20 million. When he came to me, he was trying to raise a bridge round because he couldn't get his valuation high enough for a Series C. He came to me and he told me, hey man, يا زلمة مع treasuries قد ما صاروا عاليين ما بقى حدا عم يعطينا مصاري. So he's just saying that it's part of the way he thinks. It's not just about his company, it's about his company, his behavior, his strategy, all of that. So for CFOs, yeah, I don't know. We're not gonna go too deep into that, but overall, it would be useful. These are things that you as CEOs, you don't need to do these things, okay? But you need to know what these things look like and how they work. But you don't need to be creative with these things. So we're talking about creating a stable accounting back office. Every company is gonna need that. You can start with QuickBooks, you can go to more advanced software, you can start with Excel, you might not need very complicated things. If your startup is very early, your accounting will be very simple and you can do it yourself. But you want to think about, you want to build an accounting system that scales as your company grows. Otherwise, it really can get very messy. يعني with the allocation of the account numbers, with this related to this and this, هيدا دفعناها بس هيدا اللي الكود هون غلط. So I would recommend you to start thinking, just start thinking at least about an accounting system and how you're going to work with that. بعدين your CFO really needs to know the accounting rules very well. Again, you don't need to be an accountant to be a CEO, but you need to be familiar with the rules, like the basics. I'll get into that a bit more. And there's usually two standards that are followed with accounting, one called GAAP, one called IFRS. Also, the CFO is going to have to help you with monitoring your cash flow and your burn rate. You need to, and eventually, as your company grows, you need somebody in charge of accounts payable and somebody in charge of accounts receivable. So just to collect the money that people owe you and to pay the money to people you owe. It becomes their own, like their own branch of the finance department. And the thing is, the CFO should have a close relationship with the head of sales. Okay, honesty.
Okay, Hani. هلا أنا بعرف إنه the salaries of CFOs is a lot, right?
Yeah.
Per month, yeah.
Yeah.
So نحن at what stage should we be having, يعني expecting to have a CFO? يعني هل أنت you're generating revenue at a certain number to have a CFO? Is it better to have it someone early? I would like to know إنه نحكي CFO يعني $10,000 let's say of a salary per month. Who can afford that مطرح ما نحن وإمتين we should be thinking seriously about having someone.
Yeah, I mean, the simplest answer would be if you're getting customers and you're keeping your books.
Yeah.
You don't need to full on hire a CFO initially. You could hire like a financial controller.
Yeah.
But that's the same as hiring a developer versus hiring a CTO. The CFO would think strategy, would know what to do in these situations, like a CTO. CTOs and CFOs are obviously more expensive than developers and financial officers.
صح.
But as the system scales and grows, I would say when you start to feel that your financial officer, that's when I would like start to get, but you have to see before that, when you start to feel no, you're not getting the reporting you want from the financial officer because the financial officer is incompetent in the things you need. Maybe you could hire somebody who can do those. Maybe you can hire one person to do those two things. That's how I would look at it.
All right.
Okay. And then, okay, so كمان building a budget. You can build a budget, and it's not rocket science if the company is small, but like when you're doing budget forecasts and you have 5 departments and each department is interrelated to another department, and your line items on your department's budget affect the line items on the other department's budget, and no, it doesn't turn out to be that straightforward. And a good CFO would know how to navigate these things. But this is the beauty of startups. You can start out with a financial officer who's very talented, and the financial officer goes on to being CFO caliber. You can grow together. You can grow together. You don't have to hire a CTO. You can get a developer full time, and after, like you as a CEO, at year 2, year 3, year 4, your skills will be better, and your developer would grow with year 2, year 3, year 4. Maybe the developer can become the CTO. But in any case, I wrote the CFO should be telling the story with numbers, but as a CEO, really, you should also be doing that. I saw a cool video once. It's about this dude, Damadoran or Daromadan, he teaches at NYU. He was saying when you're talking about analytics and finance, every story has a number and every number has a story. It left an impact on me. I encourage you to start thinking this way about your numbers. Okay, let's go on. We didn't cover CFOs too much, and at the end, I'm going to show you my recommended reading list. Now we're going to go into like financial statements and what they mean, what they do, why they're important, can I afford not to know them? So the things which you want to be familiar with are concepts of margin, debt, and equity. Now, whenever anybody tells you margins, you look at that thing on the left, the income statement, okay? Margin, if somebody tells you my gross margins are bad, or my operating margins are bad, or my operating margins are good, but my net margin is bad, think income statement. This thing, you don't need to know how to build one from receipts. That's what your finance people can help you with. Your accounting people, yeah. But can you see my mouse? Can everyone see my mouse? Because I want to point to places. Yes?
Yeah.
Okay. So simply, the gross margin would be this part here. It would be revenue minus cost of goods sold over revenue. And then you get here 1%. This is how you calculate it. What this factors in, it factors in what amount of money is going into building the product itself, okay? Not running the business. Like, think that you see gross profit, and then there's a line under it. Gross profit is taking into account what is paid to build the product, okay? And for a service business, it's for wages that are the exact, specific wages that are being paid for the particular service. Now, everything under that, up until this thing called EBITDA, is just about what you're paying to run your business, like advertising, logistics, sales, accounting, legal. And then at the bottom of it, you get the operating profit. And when you subtract the revenue minus your operating expenses, you get your operating margin. When you subtract all your expenses from the revenue, you get your net profit, which is called the bottom line, versus your revenue, which is the top line. And at the bottom, you get your net margin. Holy kaman, Abir, again, fake it till you make it. Fake shway, knowing the difference between operating margin and gross margin and why it's important to know both. At some point, it's just gonna become like this. Like you'll see, no, that would mess up my margins. I need to show this investor this number. It could get the way you're describing the story of your numbers. You just need to break it down into these things. My gross margin, operating margin, net margin. So these are just things that you need to be familiar with as concepts, just for when you're talking. This is what people are referring to when they're talking about margins. Kamen, your balance sheet on the right-hand side. We're going to get into the balance sheet later and why it's important to know this when you're talking to investors. Yeah, so once again, you need to just, when you get involved in this financial stuff, you just need to get a feel for it. Really, you don't want to be the one who's crunching the numbers if that's not your thing. But you need to have like some quantitative sense. If your analyst is doing something and they give you this number, you should be able to say, whoa, no. You need to have this ballpark sense of what makes sense from your numbers and what doesn't. With this, you get by immersing yourself in these things. And at some point, you might feel nothing, feel 0 cents. And other times you'd be like, okay, I'm starting to get it, not from day one, but that's what you want to aim for, Abir. I'm saying Abir because you brought up fake it till you make it. It's a good way to do it. Because trust me, there are other people who are talking about these things who don't understand it very well as well. And you want to be on the side that understands it. Okay? Okay. And then, okay, so this is something, Kamal, in accounting, there's something called journal entries. Honestly, I know whenever I think of a financial transaction, the only way I can understand it is when I think of journal entries. I'm not going to get into what these things mean, but it's just a way to take any transaction, break it down, and see how these two financial statements are connected to each other. Journal entries are the pre-step to building them. And it's just, there's so many interconnections. I find it very interesting. I'm not saying to go study journal entries and become expert, but it would be interesting to get to know what these are and how they work. Now, we'll talk a bit about how an investor would look at investing in you or not regarding the income statement on the left-hand side, okay? So the investor comes, and the investor's like, you tell the investor, I need $5 million, and I need $5 million. I'm going to spend most of it on marketing, for example. It's not going to happen like this for you, but this is one example of how it could happen. Give us the money, and I would invest in a team and invest in marketing and in building a product, and I would be able to grow my revenue by 10%. Okay? So the investor would need to look at your numbers. They would need to see your financial model. And they want to see at the top on the left-hand side, if you can see it, you see this is the funnel, the sales funnel. We covered the sales funnel with Alia in Sprint 4. So the investor is going to see the expenses that go into your funnel, and they would need to see detailed financials for this. And they're going to say, okay, you know what? We ran the numbers with your model. You're saying with 5 million, you can get 10% revenue growth. We're seeing that with 5 million, you can only get 2%. What do you tell them then? Oh, well, I got my numbers wrong. So Kamal, it's from this sense, this is top line thinking. They're talking about when you hear top line, it's revenue. It's the first line of the income statement. When you hear bottom line, it's net profit. It's the last part of the income statement. So this is one way an investor might look at investing money in what you're trying to create, where the financial model would inform the investor whether or not you're suggesting accurate or predictable or possible growth as a company. And then, okay, so Holly, I have 3 case studies. So I don't know, I hope some of you know the company WeWork. I think they got to a valuation of $48 billion. Well, there's a good television show on Apple TV that I recommend you watch. It's called We Crashed. We Crashed. It just shows you the story of WeWork. Okay. They got to a $48 billion valuation, and they were spending $1 million a day. If I got it correctly, it was, I believe, $1 million a day. But they were growing. When you grow, you gain market share. When you gain market share, competitors die. But they're growing. If it's growing, there's a lot of this in startups. It's growing. The revenue is growing. Market share is growing. We're not. It's not sustainable. I don't care. It's growing. It's growing. It's growing. Now WeWork filed for bankruptcy. They were valued at $48 billion. Top line thinking can go the wrong way, but then you say, hey, you know what? The CEO of WeWork, he got a $2 billion settlement for leaving the company. You say you created a business that generated no value long term, but I got my $2 billion. So as you can see, for the financial industry isn't always like the most moral industry. Then we have another case study, Fast. They raised, I believe, over $100 million, where they had $600,000 in revenue. They raised over $100 million with $600,000 in revenue. Why? Because they were showing that they were growing users. It was like a fast checkout startup. It failed. They raised money just by telling the investors and showing them, look at all these users, look at all these users. I know they're not paying anything now, but we're just going to keep getting lots and lots and lots and lots of users. And then when we do monetize, you'll make a killing. Went bankrupt, doesn't work. Sometimes it works. Hey, I don't want to say it doesn't work. It worked for WeWork, guy got $2 billion settlement. And all of these companies would be not profitable, mind you, okay? A lot of them would have big growth, but they're burning cash more than they're making money, but their revenue is big. And what happens in these VC kind of valuation games, what happens is the valuations are just based on a multiple of the revenue. That's why they want to keep the top line going. They value the company like 8 times revenue, 12 times revenue, that kind of thinking happens. Now I invite, what I told this story, I'll let you read it with the recording, but just what I told you, they raised $100 million and then they couldn't raise at $1 billion valuation. So they said, "Khalas, we can't anymore. We're going out of business." Now I want the audience here to tell me, by the way, audience, here, whenever in accounting or finance, you see brackets, it means minus sign, okay? It means negative. So here under 2022, you see the brackets, it means minus 9.141. And this is usually in millions for big companies. So this company,
minus sign is there a reason why they don't just use the minus sign?
the history of accounting in that department, ما بعرف ليه بيستعملوا minus sign. I'm sure they would have been like, they probably set the convention and they just went along with it. I think maybe it could be لأنه حتى I don't know the answer to that question. عم فكر لك بشي طريقة إنه why would they not use the minus? I think it's more visually appealing this way, to be honest with you. من يكون في شحطة صغيرة and then like a number.
To complicate it more. هيك يمكن.
Maybe كمان نورة, maybe ما بعرف to complicate it. المهم, so this company founded in March 2009. They were unprofitable until 2022. Who knows what this company is?
Facebook.
Uber?
No, Facebook.
Uber.
Is it Uber?
It's Uber who got it.
Uber.
أنا ورفيق مع بعض قلناها I think.
ايه الله معهم. ايه لا, Facebook's making 20-30 billion dollars of profit every year. Facebook, they went over the hump. قال عنا وقت ايه. طيب.
I remember reading an article last year about how Uber finally broke even and made the profit.
Yeah. So again, top line thinking. Amazon, biggest company in the world at some point. Top line thinking, are not profitable. Jeff Bezos was on a talk show, and the talk show host was like, "Please explain it to me. How can you be the biggest company in the world and not turn a profit? The math, it doesn't make sense." Yeah, honestly.
Sorry, ما فهمت. They founded this in 2009 وبعد 10 سنين لأنه here it starts 2019.
Yeah, I didn't have the numbers in 2009, but they were founded 2009. The 2020.
شو عملوا ب10 سنين Uber؟
شو عملوا ب10 سنين؟
يعني من 2009 till 2019, what did they do across over 10 years if they were founded 10 years before?
They were startup.
They were building the business. They were building the
10
business.
years?
أخذوا ربع ساعة على كل client.
Okay. And the 10 years is a lot of time.
Yeah, but they're making like revenue, billions of revenue. ما بعرف شو قصدك. أكيد it's a long time. But what's your
لا إنه مين في ضلوا من 2009 to find a business and then in 2019 بعد when they're not making money, how did they survive 10 years doing what يعني؟
Yeah.
And they went public.
هذا
And by the way, they did an IPO.
They did an IPO أولا. Net income doesn't mean cash. هاي كمان شغلة I would recommend taking an accounting course to understand the difference between actual net income and what that means, how that's different from cash. Okay, it's a basic accounting concept, which I would advise you, Abir, to look into basic accounting to see the difference between net income or cash. لأنه there are expenses in the income statement that are non-cash expenses. ما حنفوت فيهم هلا يعني. بس when they have negative income, it means إنه their costs would be bigger than the revenue they're making, but that doesn't mean they don't have cash to run the business. It's just an income statement measure on the financial statement بحد ذاته. It's a measure of profitability, but it doesn't mean that they don't have any more cash. They might have $100 million in cash and be unprofitable because cash is on the balance sheet. Cash doesn't show on the income statement. Holy كمان basic accounting. I think for anybody in this call who had trouble with this, knowing the difference between net income and cash, I would really recommend you take a basic accounting course. So Hala, I can give you a link that has good courses on it كمان.
معقول بيعملوا مثل الاثنين مشان يهربوا من التاكس؟ يحطوا ماينس.
ايه في تاكس ديدكت، اكيد فيك تزيد الانكم ستيتمنت هيطلع النت انكم اقل ودي كان تيك تاكس ديدكشنز اكيد. اتس تاكس ديدكتبل لانه النت قبل النت انكم اخر شغله بتكون قديش يور تاكسينج البرسنت للمصاري الباقيه. سو كل ما شلت اكسبنسز اكثر ساعتها يور نت انكم بيوطى، بس بتكون دافعه لس تاكسز عليه 100%. وضحت امجد؟
Yes, thanks. Yes.
Okay. هلا bottom line thinking, who cares? هلا the way I see it is انه let's say you have a fruit tree. The fruit tree grows, it has branches, but it doesn't have any fruits yet. What's the purpose? So I would see the profits as the fruits. This is, I think, a good analogy to think about the difference between growing a company top line and actually having fruit بالآخر يعني. Because you take the net profit, or you can reinvest it in the company, or you can give it to the shareholders. That's why I choose profits. I find two reasons. I mean, fundraising. Imagine you're chasing. Actually, fundraising is hard. Imagine you're chasing these investors, emails, and calls, and messages, and then they ghost you, and then they contact you again, or they ghost you a second time in 2 months. بس بيرجعوا بيبينوا كثير فيها dynamics. It'll make your focus. The things you need to focus on to fundraise and the things you need to focus on to run your company are not always adaptable to each other to happen at the same time. It needs a different mindset. When I'm fundraising, I'm talking all the time, I'm making these calls, I'm traveling when I need to, I'm asking for reports, I'm getting quick advice from my CFO. طب بالاخر I don't have خلاص بقطع على راسي, I don't want to fundraise anymore. وكمان another reason, when you raise money, you own less of the company. It could be that you're raising at a higher valuation, so you own less of more, but it dilutes you. When you have profits, it doesn't dilute you. So those are two reasons I think you could be like, you know what, I'm done with this fundraising for a while. بعدين yeah, so typically strategic acquirers, so let's say you're in healthcare, who a big pharma company, let's say J&J, would they see you have a good medicine, would they want to buy out your technology and they want to buy out your IP, or they buy out your company with everything included. Only they would tend to look for a balance between top line and bottom line. We care about both. بس لما بتروح على IPO, initial public offering, it's when you start to sell your shares publicly. Like we remember in the slides before, we talked about the market. You can get into the market, not into the S&P index, but you can start to sell your shares on an exchange like the NASDAQ, and you can start to get money from investors who are willing to put money into your business. So IPOs, they look for like red hot growth, like who's going, I'm going to invest here. It's like a party, honestly. And then they lose $100 million. Okay. So my recommendation is to have as your financial story, has to have your growth story, how you're growing your top line, and how you're running lean, which is the expenses, so that eventually you can make the profit sooner rather than later. You don't want to show that you're not growing, but you don't want to show that you're burning too much. It's burning as in spending cash to grow. It's a delicate balance, and you get to this, again, to the income statement. When you're talking about your growth story, you think top line, revenue. we can sit down and we can talk about your growth story. This would need one-on-ones because it might be too abstract now for you to think about what's my growth story. You need your lean story. If you have growth with high expenses, it doesn't look good long term. So running lean is just running with the least amount of expenses possible, so you can sustain your business. Okay, so what about the balance sheet? When you talk about company value, there's book value and market value. Okay, the book value is just your. This is also back to accounting. The accounting formula is assets equal debt and equity. So your book value, the value of your company on the accounting books, is just your assets minus your debt. And you can see here, I didn't put, I put like a symbol near debt because technically this isn't the real balance sheet. Instead of debt, they put something called liabilities. But a big portion of liabilities would be debt, as in what you owe others.
I have a question here.
Yeah.
Convertible and safe notes. Is
جاي
it
لك
considered
جاي لك
debt?
جاي لك
Okay.
جاي لك واصل. So when you talk about book value, it's just your assets minus your debt. That's your market value is what an investor would think your company is actually worth above what your books say. As in, they see strategically long term, this company is going to grow. It's a bull. It's fire money. Let's invest in this. So these are two things to keep in mind. So when an investor is going to tell you, I want to invest in you 1 million into 9 million pre-money valuation, they're not talking about book value. They're talking about market value. So that's something to keep in mind when you're navigating these things. And when you talk about the convertible securities, as in safes, convertible notes, if you understand journal entries, it makes your life easier. It makes more sense when you see how these things work in journal entries. Journal entry is like ABC of English, like ABC of English, the alphabet. The journal entries is the ABC of finance.
How to include your market value in your book value?
You don't include it when you're it's a good question, but it's two separate things. It's two separate things. So جاي أفكر لك إنه if the market value for this investment would be $10 million وبده يفوت على الشركة 10 مليون، بيفوت على الشركة ساعتها بيفوت على assets ككاش 10 million. What would balance on the balance sheet من ناحية الإكويتي هو 10 million that got invested as an asset, which is cash. So they're connected. So بصير عندك a new book، بصير عندك a new book value. بصير book value غير book value قبل الانفستمنت.
Can I give an example of market value that's bookable?
نعم.
Can I give an example of market value that could be placed in the books?
You want to give an example?
If it qualifies as an example.
Hey, please.
For example, we got selected for a certain show, a certain exhibition for free. And typically our competitor would pay $20,000 to be accepted. So the market value of our participation is $20,000, but the book value is $0. So we can actually place $20,000 as marketing expenses.
Mm-hmm.
But there would be no invoice for that. But this is something we actually saved. And there are many examples of this, similar small examples, not on the big picture.
Interesting. But let's talk more about that after the call out tomorrow. It's interesting.
Okay, thanks.
طيب. So as far as saves, they go initially. كمان هون different people might tell you differently because not everybody understands it. أنا من مفهومي ومن my research from talking to people وهيك, the save starts as a debt, when convertible note starts as a debt, it converts to equity. It starts on the debt side, and then it becomes equity. There's journal entries for that كمان show you how that happens. يعني فاتت المصريات وصار وانت اعطيت السيف ايه. So انت صار عندك let's say $10,000 cash وانت you issued the safe. هيدي $10,000 cash بتبين as a debt instrument. When you want to convert them, there's a journal entry اللي هو بيصير انه you do something called a debit. You debit the loan and you credit as equity. هول their financial statement mechanics. So بركي هون المهندسين بينبسطوا اكثر ب that level of detail. So this is really it comes in handy. I don't think they would quiz you on it, but I think it's an added bonus if you can understand these things as well. Okay. Laidi, it's a philosophical question. I don't think we have time for more philosophical questions. Let's skip these. It's just a technicality, and if you watch this webinar again and you're curious about this part, the question is it better to issue equity, like 10 shares of equity at $1 per share, or is it better to do a SAFE or a convertible note where I issue the shares at a future date for the same price? And that's the question. If nobody was had a سؤال بس. Let's just continue. Now, one last thing on this. So كمان with the safes and the convertible notes, the valuation cap, it's a balance on what to choose. لأنه if you choose the valuation cap too low, it will make your company be perceived as having a low value. But if you put your valuation cap too high, then the upside for the investor isn't enough for them to benefit from the valuation cap. So هون كمان it's a balancing act. We can talk in detail كمان إذا بدكم نحن how we've negotiated valuation caps at iPark. Let's skip these. كمان يعني safes هون they're called simple agreement for future equity. 2 weeks ago, this guy اجى لعندي I was explaining it to him. It's not simple. I don't know why they're calling it simple. حتى صار في articles, the safe, is it really simple? It's not simple, because when you start to break it down, what it does and how it works in the mechanics, it's hard to explain. But when you want to keep it very general, maybe people who don't even want to understand very much, they're just going to be like, okay, خلاص يا خيي بعطيك المصاري وبعدين نحكي. So هيدي كمان بخصوص السيفز. Okay. كمان هيدي it's just a roadmap with the different من C, the first round of the Series A growth. Just a nice diagram I found. وكيف at different parts who invests in what parts of the funding life cycle. طيب, هلا when we talk about the basics of financial modeling, I'm not going to go too much into it because the basic, عن جد, the basic is to understand the 3 financial statements and their interrelationships. I showed you today the income statement and the balance sheet. There's one more called the cash flow statement. And you build the cash flow statement from an income statement and the balance sheet. Now, my friend, he's a CEO of a media company. He's actually created his own online system that when money comes in from his accountants, the system just gives him the numbers and the cash flows that he wants. So هون كمان, I'm not encouraging you to do like magical accounting, but I'm saying at least one person I know found accounting too complicated and wasn't helping him decide when am I going to be able to pay X for this product or to pay who I owe. He created his own systems to follow the cash, because it's all about following the cash. It's all about following the cash. So as a start, just understand these statements, how they work, just how they work. Don't need to do them. You don't need to build them, you need to do anything. Just how they work. Let's start with, okay, this is a completely new field. I know nothing about it. How do I start from an income statement and a balance sheet and I go to a cash flow statement? That's a good question if you want to start. Now, these are just also very rough Excel kind of advice. Even if you do a good model, you need a separate sheet for your assumptions. If you're assuming growth rate, or if you're assuming how many people you think you're going to get on board within the next year, if you're assuming how much ROI is your marketing going to do, you do a full sheet of assumptions, a clean workbook page. These are really important, and you would be surprised. like if you see somebody very well dressed, but they have a good personality, but somebody who's very terribly dressed with a good personality. The first impression of the model is important. That's why you need a clean workbook cover page, workbook table of contents. If you do color schemes, then you should explain what you're doing. You separate your model from input calculation and output. كمان حاطين no costs within the formula. هلا we're matching you with finance people with one-on-ones. The purpose of the one-on-ones with these financial people would be to build your model from scratch if you don't have one. So don't worry if this is a bit too much or too overwhelming. You're not expected to build a financial model on your own. I think it's way too complicated. Just to build it right could need you to do some extra research, to build it in a way that scales, come in. So we're going to get to these one-on-ones. Hopefully they can give you the infrastructure of the model you're going to use and give you maybe a bit of advice and documentation about how to take your model to the next step. So again, I would say, yeah. Yeah,
Can
someone
you
say something?
share? Yeah, it's me. Can you share with us like the templates for financial for the startups, like the one that you shared during the course in IVP, the one which calculates investment to shares distribution. It was great.
Okay.
So similar templates, if you have or you share, that would be also beneficial.
Yeah, I have a few. بس في منهم يمكن they wouldn't like them to be shared. But I have one very good one that we are permitted to share. So I'll share that one with the whole cohort. Okay.
Yeah, whatever is for the public.
Yeah, I have a good one. I have a good one.
Thanks.
We have permission to share it, so I can share that one for sure.
Appreciate it. Thanks.
So Kamen team, I really recommend the basic accounting course, Coursera. Also, this website, 365financialanalyst.com. There's a course on there for three-statement modeling. Just go through it once, just one time. Don't become an expert at accounting and finance if that's not your thing. But go through it and understand the principles. بس هيدا أنا عم بطلبه مش أكتر. بعدين وصلنا. Again, this is what I'm selling. I hope you're buying what I'm selling. Differentiate yourself from other CEOs. Become a financial CEO. Become a CEO who's really good at finance. Not good enough to be a CFO, but good enough to understand if the CFO is bullshitting. Maybe that's the good place to be in. مش أنت روح اعمل لي إياه يا خيي ما عم بفهم شيء. More like إنه no, that doesn't make sense. Please, that's the vibe you want to try to reach. Okay, so we're on time. And so we're going to go very quickly with some theories of pricing to end this. Because pricing is, it's psychological very much, but there's numbers in it. So I thought, hey, just put it in with the other number slides. The first one is called charm pricing. So when we look at the numbers, we focus more on the number on the farthest left when you're reading English. So 299 and 3, it just feels different. And when you look at the cheap discounted goods like Walmart or GoDaddy, they use these kinds of pricing. But it's not just for discounted. So Starbucks would differentiate itself from Walmart and GoDaddy, but بيحطوا plus 499. I think there's something to it. I can't really explain it. It's a bit intangible. And when if a Starbucks cup was 499, or it was 495, I just feel like 495 looks better, even though it's cheaper. Yani. I don't know if anybody else feels the same way. بس أنا هيك بحس. This is from research. Yani. This is not my analysis. I got this from research that was done about 495 versus 499. Then you have prestige pricing. So like for a luxury product, like a car, for example, like a Ferrari, they're not going to sell you a Ferrari for 599,199. They have a good whole number. So if you have something that's fancy, you put like a good $50 a month. Okay, just a good whole number for it. Then you have something called quirky pricing. And quirky pricing, Amazon use this when they want to sell me audiobooks. They bundle 3 audiobooks for $22.66. I'm like, well, the idea here, the strategy is you're telling the person you're selling to that you really cannot go below this. Like you have no margin left. Like we talked about margins before. So this is the lowest cost you could possibly. Of course, you can cheat the system and say we priced it at 533 because we can't go any lower, but you could go lower. So كمان هون it's a messy situation, can get a bit messy in the analysis. Now, كمان, you have those 3 general ideas of how to price. Then you need to look at what your competitors are doing. It's not rocket science. So the first thing you really need to see if you want to price yourself, what are they pricing? They're already in the market. Am I offering the same thing? They don't know me in the market, so I might undercut. I have extra value. I have priced it higher, but then you have to explain how are you pricing higher? What is your justification to have a higher price than the market incumbent? So again, your story needs to match your pricing strategy. So we talked about story. We had 2 sprints on story. Now we're talking about financial story, lean story, growth story, pricing story. If we hack it, fake it till you make it كمان يعني فيها حكي. Then there's something I felt كمان I wanted to discuss in pricing, decoy pricing. So let's say you have the example I got this from was 3 buckets of popcorn. There's the $1 bucket, the $4 bucket, and the $5 bucket. And what the $4 bucket is, that's the decoy. That's the one you're using to kind of trick the person who's buying to go for the higher price one, because it seems that the difference between what you're getting for $5 and what you're getting for $4, the value of that would seem larger than the difference in the price. So I was reading, there was a psychological study done about this kind of decoy pricing, which was really, it was really eye-opening. I can share with you the report after the call. So I didn't want to just copy it just for copyright stuff. So we're at the end of this, and I hope it wasn't too overwhelming. I'd just like to hear some thoughts from people who were afraid initially. Yehuda, what are your thoughts on what you just heard?
Okay, I thought it started hard and got easier in your presentation today, because maybe the ones تبع الstatements وهيك we already covered that in webinars in IVP, so it was more familiar to us and it's something that we really should know. So my thoughts are, can I tell the story from what I know? The first part was just gibberish. Yeah, I've never heard of these words before. هلا يمكن مرة على مرة once you're exposed أول شيء, you find it difficult, and then شوي شوي you get assimilated. مثل ما we found it difficult بالstatements قبل, and then now it has become something very much easier. So I thought you did hard and شوي شوي خففت عنا.
Yeah, I mean, okay, interesting. So I guess next time I'll start with what people might be more familiar with, like the financial statement stuff. Okay, ease them into it and then get harder.
Ease into it, yeah.
Okay, now I told you at the start, and it's the first time I give this webinar for this.
You did great. You did
Thank
really,
you.
really
Appreciate
well.
it.
Thank you.
Noura, thoughts with Noura.
Yes, لا أنا I think كل ما عم نسمع whole terms أكتر كل ما we're getting familiar with it more. So it's good يعني إنه I think I have a lot of research to do بس
Yeah.
لا it was clear, thank you.
Yeah, I mean the first stuff, it's just new.
Yeah.
It's not like hard. It's really not hard. It's just maybe you've never heard of it. That's what I think, yeah. So again, I say, the above, the previous slides are the building blocks for any financial CEO, and I reiterate, where is this? Differentiate yourself from other CEOs, become a financial CEO. I really stress this. I think this would be a big difference for you. Back to the last slide. There's no excuse not to know. I mean, why wouldn't you know? You should know. And think about these building blocks as like footwork when you're trying to play basketball. Your footwork is wrong, you can't maneuver, you get injured, you don't know what to do in this tricky situation. Well, with good footwork, you can get yourself out of situations that you've never seen before. So consider these to be the building blocks for any financial CEO. And if you want to take a snapshot, these are references. These are references I think you should be familiar with. There's a great book called Start CXO. It covers Chief Product Officer, Chief Marketing Officer, Chief Financial Officer, Chief Commercial Officer, and others. It's by Techstars, and also maybe more relevant to you, Startup CEO by Techstars as well. Interested in product management. Product management Secret 7, that's where I got the pricing data from. If you want to get into financial modeling and are serious about it, I would recommend the Handbook of Financial Modeling. And there is a Harvard curriculum called Harvard Finance. I would recommend to look at that. The last quote is just an article I referenced. So we're done. We can have a few questions. Anybody able to ask?
هاني راح الصوت شوية بالآخر.
هلا.
Yeah, hello. I think it's better. I have a question. And you guys are gonna assign us new mentors for the financial model تبعنا, or from existing mentors?
No, they're new mentors.
All right.
Questions? Maritza, attendance?
Yes, I send it on WhatsApp, on your WhatsApp.
Any other questions? I hope this was informative.
I have one more.
Scare you.
Sorry, أنا اليوم كتير.
Sure.
Okay, net profit is different than net revenues. يعني do we profit and revenues are they used interchangeably أو كل واحدة إلها معنى مختلف عن الثاني؟
Yeah, they're completely different. Okay. Revenue is top line. So it's the first thing that appears on the income statement. That's why they call it the top line. Like that's literally why they call it the top line. It's the top line in the income statement. Revenue. Profit is the last line in the income statement. Well, that's why they call it the bottom line. It's the bottom line of the income statement.
بدك تاخديهم هيك عبير، شو دخلتي مصاري وشو بقالك؟
100%.
Yeah, because I know many times I've heard net revenue. You know, it's like used more often than net profit.
No, I wouldn't say it's used more often than net profit. I'd like to see where you're hearing that.
Okay.
Net profit دغري بفهم شو يعني من accounting. net revenue بصير بدي افكر بشيء اسمه GMV وشلنا منه الريتيرنز بوصل على الريفنيو الحقيقي. So it's more like فيها بخذ عملات.
Yeah.
Revenue.
Yeah. Okay. All right. Net profit then.
Yeah, net profit. The profit isn't cash because there are non-cash expenses. خليلك non-cash expense. فاهم شو يعني؟
لا هلا بدنا نعرف the difference. I want to research the difference between net income and cash, and the net income doesn't mean cash. هيدا اللي على بالي هلا بدي أعرفه.
Yes, good. I made an impact.
You did.
Cash equals profit. Cash يعني شو بقى معك بجيبتك. بجرب أعملهم simplified.
Thank you so much, Hani, for this. Really.
Great.
you, Hani.
Other questions? Okay. Okay. Well, 1 hour and a half. Great. Okay, guys and girls. Thank you for attending the session. I'm happy and at least one person now gonna go down the rabbit hole. Akid, I want all of you to go down rabbit holes, but only one can. I'll take that. Hikmat, you unmuted yourself.
Yeah, Kendalak, thank you, Hani. It was very helpful and beneficial, and thanks a lot.
Okay, yalla. Bye. Bye. Bye.
Thank you.
Bye. Thanks.